Hello, everyone. My name is Michael Duke. I am a investor and analyst, and today I will be doing an analysis of Philip Morris International, ticker PM. First, I'll give an overview of the company and just kind of run through the thesis for why I think it might be a compelling investment for your portfolio. I'll run through some of the valuation metrics and some of the financial performance over the last few quarters. Talk about some of the risk factors of investing in this company. Give my grade, and then also do some technical analysis. As always, what is presented here is just my opinion and never is meant to be financial advice. So with that, let's get into it. So Philip Morris International was created in 2008 when it was spun out from what became Altria Group. So in other words, Altria Group, what is now Altria Group, ticker MO, it used to be all of the Philip Morris International brands across the world. However, Altria Group now is US focused with ownership and rights to those brands in the United States, whereas Philip Morris International is ex-United States. And I think that alone is a major advantage for Philip Morris International over Altria, because the United States is a much, much tougher operating environment for tobacco and nicotine companies. The big reason why this stock is notable as of late is because of the smoke-free portfolio of brands that they have. And really, the main drivers of that are these heated tobacco products. IQOS are these brands here, e-vapes, and the nicotine pouches here. The nicotine pouches are really how I came into taking a look at this particular investment. The reason for that being that I am a user of these products. I have been for some time. And as such, have tried a couple different ones. And what is interesting in regards to the nicotine pouches is that this was within the last 2 years, Philip Morris International acquired a company called Swedish Match, which was the founder of the ZYN brand, for $16 billion. And that is a pretty notable event. And what's interesting about that, and this is the main thesis for an investment in this company, is that the nicotine pouch market is growing at a phenomenal clip. So I'm taking a look at, this is a report on Grandview Research here. The global nicotine pouch market estimated at $4 billion and is expected to grow at a compound annual growth rate of 34.4% from 2025 to 2030. That is substantial growth, but I believe that by 2030, that represents like a 15 billion-ish market. Now, obviously, that is a small market, even just compared to the market cap of this company today, being that it's a $205 billion large cap equity. However, the substantial growth of just this market segment alone, and I won't even really touch on the heated tobacco products, but those actually make up the bulk of the smoke-free business revenues right now. I might in a later video if requested by my viewership. But anyways, very compelling in that this company is an outlier within the tobacco segment, in that almost half of their revenues are coming from the smoke-free products. So there's a reason that this company is trading at a premium right now compared to the other tobacco companies on the market. And the price performance has reflected that. Just in April, it was trading around $90 a share, and is now, the day I'm recording this, November 19th, is trading above $130 a share, just a tad off of its all-time high. So the sentiment around this stock is very, very positive right now, and it's driving massive share price appreciation. In fact, this company has beaten the price return of the S&P 500 year to date. A tobacco company, which is not typical. Usually, these companies beat the market over long periods of time with dividend reinvestment. So, the thesis for investing in this company is it is a wide moat stock here, as we see on the Morningstar report. It's a wide moat stock that has a lot of upside from these new product categories that don't have the same known health risks that combustible tobacco products like cigarettes do, or oral tobacco like chewing tobacco. So, in a lot of ways, a company that has 100% of their cash flows being derived in theory from something that does not cause health risks, that is a lot better of a company than the alternative to that, of course. So because such an ever increasing amount of their revenue is being derived from these smoke-free products, this company is starting to trade at a well-deserved premium. If we just look at some of the differences between this company, we see here over the 1 year and the 3 year time frame that this stock has outperformed the S&P 500, and notably, you see here that this stock actually did not sell off very much, and this is just the price return, not the total return. It traded range bound during the late 2022 bear market seen in the broader market, and has outperformed the index since April of this year. So that's a winning formula for a value stock. It doesn't sell off as much during periods of market weakness and has phenomenal financial results in the bull expansion period of the broader market, resulting in outperformance. And I believe that this trend will continue, and that this stock will at least market perform in terms of price return, but have a substantially higher dividend yield, which will result in outperformance. You see here the forward dividend yield being 4.1%, a 5 year growth rate of less than 3%. That hasn't kept up with inflation. It has a high payout ratio. This is a lower starting yield and a lower growth rate than other tobacco stocks. But there's a story behind that. And the story behind that is they have not increased their dividend as much as Altria Group because they've opted to take more of their cash flows, retain them, and make acquisitions, such as the marketing rights to the IQOS in the United States and the purchase of Swedish Match, both of which are very accretive to earnings. And speaking of earnings, we'll take a look at earnings growth. Very strong financial results in the last few quarters. 8.4% in the prior quarter, year over year earnings per share growth. 5.6% in the prior quarter. 9.65% in the prior quarter. 10.98% in the prior quarter. So that's very strong financial performance. And what that does translate in terms of dividend growth is it's reasonable to expect, and I fully anticipate, that dividend growth will accelerate in the coming years. In fact, if we look at some of their prior increases, again, less than 3% over the last 5 years in terms of dividend growth. In 2022, their raise was 2 cents on $1.25. So that's not even 2%. Their raise was 3 cents on $1.27. Also, I believe less than 2 or 3% there. The most recent raise, $1.35 from $1.30, represented roughly a 4%. So we already see the dividend growth accelerating. And just as a root of comparison, the dividend growth of the S&P 500 over the last 5 years has been about 4.5%. My objective is to achieve a portfolio yield that is roughly within 50 basis points plus or minus of the risk-free treasury rate, with a dividend growth rate roughly in lockstep with the broader base market index. This stock fits that mold almost exactly. It almost checks the exact yield profile at the current price that I'm looking for. So it checks that box. And as such, along with very strong narrative, very strong market sentiment, which really helps drive prices, still an affordable valuation, even though it does. We'll add Altria and British American Tobacco. We see here that Philip Morris has outperformed. Altria has been close in terms of its price return. However, I do not think that that's warranted. I think that Altria is a value trap because it's United States heavy and exclusive exposure, I think, is a major liability. And the fact that they have really the third position in smoke-free products after Philip Morris and British American Tobacco, they're not positioned for the future like this company is. So Philip Morris, I believe, is the best in breed tobacco stock to own. If you're going to invest in tobacco stocks, I would say that this would probably be enough just to get exposure. It's best in breed, has the best growth metrics, has good dividend metrics, and conceivably will have the best dividend growth out of these three companies for the years to come. If we look at some valuation metrics, let's just look at price earnings ratio. Or for some reason, BTI doesn't show up in this time frame. The data stops here, but obviously that's been the cheapest tobacco stock. Kind of more of a deep value play, but not the same growth story here as Philip Morris, in my opinion. But we see here that Philip Morris International trades at basically a double the valuation that Altria does. Personally, I think that that's well deserved. When we looked at the earnings growth of Philip Morris before, let's look at the earnings growth of Altria again. These are the same brands with the not including the smoke-free products, but the same combustible and roughly the same oral tobacco products, just U.S. exclusive versus international. We see here that the Altria earnings growth, 1.27% in the prior quarter, negative earnings growth. So that's not good. They've been raising prices to offset lower volumes of combustible products. However, you cannot do that forever. I think this stock gets a lot of attention from the dividend retail investor community. And the reason that people like this investment more than Philip Morris is because of this right here. Philip Morris International was a part of this company and participated in this dividend growth streak. You got to dive into the information a little bit deeper to know the full story. But anyways, Altria, starting yield of 7.25%, lower payout ratio than Philip Morris International, and a better growth rate. However, I do not believe that it is a better investment for all the reasons that I have mentioned prior. I think that there's a much higher degree of risk with this company in the years ahead. Philip Morris is much better insulated. And if we look at some of the price earnings growth ratio of Philip Morris International being, right around 1.5%, that's really good for a company in this sector. But let's just do a comparison here. And let's look. Yeah, so we see here, Altria is much more expensive on a price earnings growth ratio basis than Philip Morris. So I do believe that Philip Morris is cheaper, is a better value even at the elevated price that it is. It's twice the size. And Philip Morris does have good risk-adjusted returns over the last 12 months. However, Philip Morris is superior in almost every metric. So again, really like the stock. I think even at the current price, there is a good margin of safety. But now let's talk about risks. So what are the risks to this company? Well, I see two main risks here. One being currency risk. A majority of the sales are outside of the United States, and therefore, they're deriving revenues in currencies that are not as strong as the dollar. I believe that we're in a forward period of prolonged dollar strength, which doesn't bode well for other currencies. But we've been in a period of fairly prolonged dollar strength over the last 20, 30 years as it is. I think that the risk there is relatively minor, and it's very much mitigated by the fact that Philip Morris now, with the smoke-free products, is taking market share within the United States. And the fastest growing revenue segments, the smoke-free products, heated tobacco products, and the nicotine pouches, a lot of those revenues are coming from dollars. And just how big of a deal is are the smoke-free products? Well, I meant to touch on this earlier, but I forgot. Taking a look at this right here, the market share of ZYN in the nicotine pouch category is basically 3/4 of a market growing at 35% per year is rolling into the income statement of this company. That is a value stock with growth characteristics. IQOS market share. Let's just look at that. IQOS heated tobacco product has a market share of 10%. IQOS is the second largest nicotine brand. IQOS net revenues have surpassed those of Marlboro. Estimated number increased by 3. Estimated 70%. So here's what's interesting. However, what we're seeing is a strong demonstrable impact of the investments that Philip Morris International has made. And I think that the positioning of these brands sets them up for a very lucrative, winning future as a stock. So I do believe that it is a strong buy. I do have a sizable position in this company. It makes up almost 10% of my portfolio. I started purchasing when it was 90-ish a share. I've added recently in this chop up here, just because the earnings results recently have really reinforced my confidence and conviction in this as an investment. As always, not financial advice. Please do your own research before making an investment decision. But I do believe that if you are serious about value investing, that you take a look at this stock because it combines all of the really good things that make a compelling equity investment: a wide economic moat around the good or service it provides, value, paying a strong and increasing dividend, very broad or leading market share across several product categories, and at a good valuation. So in terms of entering into a position in Philip Morris, let's just do some technical analysis here. And my technical analysis is very crude, but I basically just like to find trend lines, take a look at that. So this is basically the entire trading history of this stock. Again, it was spun out in 2008. It sold off initially due to the GFC stock crash, but found a base, $33 a share. Kind of traded up off that trend line very bullishly, but broke through that here once interest rates normalized somewhat. Somewhat, and then found a new trend line up. If you've been following tobacco stocks for a while, you may have noticed they all sold off pretty hard during this period, starting in 2017, and found a new base here, right in along the $70 a share mark, roughly. COVID happened. The stock traded from $85 to $70. That's roughly 20% of a drawdown. It drew down a lot more than that, but was very quickly filled, which frankly is better than the broad-based market index if you were to do a comparison. And like all stocks, entered into a fairly bullish phase there. It increased about 40% until it found this new base around $90 a share, where it really consolidated here all the way up until April. I think somewhere in here is when they acquired Swedish Match, and they did some deal with Altria regarding the rights to IQOS in this period, or Enjoy, or one of their products. Somebody check me on that and leave it in the comments. Anyways, a couple of very accretive acquisition deals here that started to accrete to earnings. The stock shot up. In the most recent report, it broke above the all-time high. In my career as an investor, what I've noticed is that when a stock breaks above the all-time high, that's a really good time to buy it. If you're just trying to trade and make a quick profit, if it breaks above with bullish momentum, that's a pretty good setup. I think now that we're in uncharted territory, it remains to be seen where the resistance piece is. It's already bounced off this like 135-ish dollars share, could be headed back down, but I wouldn't be surprised if it bounced off of 123. In fact, it looks like it did there. So honestly, technically speaking, this is a very bullish looking chart, given that it's broken through the all-time high. And I feel completely comfortable adding to my position. I already have a very full overweight position, though. However, I've already added to it. So I'm going to fill out other areas of my portfolio first. But if you're looking for a compelling trifecta of value, income, and price appreciation, I think you should seriously consider doing a deep dive and researching this stock. Hopefully you found this video interesting. I certainly have enjoyed going through it with you. I could do this stuff all day long. So if you've enjoyed this content, then please like this video, subscribe to my channel, and be sure to hit the notification bell, because I will continue to make content like this and release these videos on a very regular, recurring basis. I have a short list of over 100 stocks that I will cover soon. But if there are stocks that you're interested in, that you're taking a look at in the market, then please comment those below. I will add them to my list and take a look at them. So anyways, again, my name is Michael Duke. I really appreciate you watching, and I hope you've found this informative, entertaining, and enjoyable. And I will catch you next time. All right. Have a good rest of your day.